Why isn't Bitcoin soaring like everyone predicted, especially after the long-awaited launch of Bitcoin ETFs? And is the financial giant BlackRock secretly pulling the strings, shorting Bitcoin and suppressing its price? Bitcoin's price dynamics have been a focal point of financial discussions, and recent activities by influential players like BlackRock have added layers of complexity to the narrative. Here is a simple logic. BlackRock charges fees for their Bitcoin ETF. The more people buy into the ETF, the more money BlackRock makes. And guess what incentivizes people to buy? A rising Bitcoin price. So BlackRock isn't some shadow puppet master manipulating the market. They are playing the game just like everyone else, hoping for a Bitcoin bonanza to boost their bottom line. Before we continue, consider sharing this video with others to help them get a clear picture of the market these days. Now let's tackle that chart circulating online, supposedly highlighting a massive short position on Bitcoin by hedge funds. This chart has caused a stir, fueling anxieties about a coordinated attack on Bitcoin's price. But hold on a minute, because there is more to the story than meets the eye. This scary looking short position actually represents a common trading strategy called a cash and carry trade. Here is how it works. Imagine you are a hedge fund manager with a hunch that Bitcoin's price will stay flat or even rise slightly in near future. You also notice a quirk in the market. The price of Bitcoin futures contracts is higher than the current spot price of Bitcoin. This price difference is like a tiny gap between two stepping stones. A cash and carry trade lets you exploit this gap to earn a little extra profit. Here's what you do. Buy the spot, short the futures. You purchase Bitcoin at the current spot price and simultaneously sell an equivalent amount of Bitcoin futures contracts at the higher price. As the future contracts approach their expiry date, their price will naturally converge with the spot price. So when you eventually buy back those future contracts to close your position, you'll be having a lower price than you sold them for. This nets you a tidy profit regardless of whether the actual price of Bitcoin goes up or down in short term. This cash and carry trade sounds pretty sweet, right? Easy money with minimal risk. Well, not exactly. Remember, hedge funds love leverage, borrowing money to amplify their gains and also their losses. While Bitcoin futures offer some leverage, it's not nearly as much as with traditional commodities like wheat or corn. This means hedge funds need a significant amount of their own capital upfront to play this game. Another risk factor is the possibility of the price difference between spot and future contracts widening unexpectedly. This scenario, known as the basis blowing out, can wipe out any potential profits from the trade. So, while cash and carry trades can be profitable, they are not without their share of risk. While the cash and carry trade might be creating some short-term noise, let's not lose sight of the bigger picture. The launch of Bitcoin ETFs has been a boon for Bitcoin. These ETFs have been steadily accumulating Bitcoin, taking it out of circulation and contributing to a price increase. This is organic, long-term buying pressure that can't be ignored. This accumulation underscores a strong demand for Bitcoin, reflected in the price increase from 46.6K to 69.3K over 149 days, a notable 48 to 49% rise. This price performance, equivalent to several years of typical stock market returns, emphasizes Bitcoin's unique value proposition, which lies in its limited supply. Only 20 million Bitcoins will ever exist. On the other hand, traditional fiat currencies like US dollar can be printed infinitely by governments, leading to inflation and a decrease in purchasing power. In simpler terms, imagine a room with a fixed number of chairs. If more and more people show up, the value of each chair naturally increases. That's the basic idea behind Bitcoin's potential for long-term growth. With a finite supply and an ever-growing pool of users looking for a hedge against inflation and a store of value, Bitcoin's price could theoretically keep climbing forever. But before you empty your savings and buy a Lambo on margin, a word of caution. The cryptocurrency market is notoriously volatile. Bitcoin's price can swing widely, and there is no guarantee it will follow a smooth upward trajectory. Owning the actual Bitcoin, I mean storing it securely in cold storage or offline wallets, is the safest way to ride the potential wave. Don't be a paper Bitcoin bag holder, relying solely on Bitcoin ETFs or other derivative instruments. These might offer a convenient way to gain exposure, but they come with counterparty risk, meaning you are trusting another entity to hold your Bitcoin for you. So, what's the takeaway? BlackRock isn't the villain of this story. The scary-looking short position is just a hedge fund strategy, a cash and carry trade that doesn't directly suppress Bitcoin's price. The spot Bitcoin ETFs are accumulating Bitcoin, which is a positive sign for long-term growth. But remember, Bitcoin is a roller coaster ride. Don't get caught up in the hype and invest more than you can afford to lose. Do your own research, understand the risks, and consider taking control of your own Bitcoin if you believe in its long-term potential. As for the hold, that's a decision for you to make based on your own risk tolerance and investment goals. In conclusion, the intricate strategies employed by hedge funds and the accumulation by Bitcoin ETFs provide a deeper understanding of Bitcoin's price movements. While short-term fluctuations are influenced by complex trades and market maneuvers, the long-term fundamentals, driven by Bitcoin's finite supply and increasing demand, points towards sustained growth. As the market matures, understanding these dynamics becomes crucial for making informed investment decisions in the ever-evolving landscape of Bitcoin. Now it's your turn. What are your thoughts on Bitcoin's future? Do you think it has the potential to become a mainstream store of value? Leave a comment below and let's get the conversation started. Don't forget to like this video and subscribe to the channel for more in-depth analysis on Bitcoin, cryptocurrency, and world economy. Stay safe and thanks for watching.